Hello everyone and welcome back to the course. In this lesson, we will take a look on basic building blocks of candlestick patterns. The first candlestick pattern is better known as belt hold candle. The belt hold candle is one candle pattern consisting of long green or red candle. When we say big candle, then we mean the body of candle is big. Long shadows do not count as big candles. Belt holds represent strength in direction of trend. If a belt hold hasn't appeared on chart for quite a while, then it should be considered as very unusual. A belt hold can be used as confirmation to other candlestick patterns. It can also form as part of other candlestick patterns. And usually patterns that have belt hold involved in them are relatively stronger and can generate quite a profitable move. It can also tell us about either a support or resistance is broken or has become active. For example, here is chart for support break. Here, as you can see, prices broke out of complete support area. The candle that came out of support area is bearish belt hold. The belt hold closed more than 50 to 60% below support area. This is what we call shift in price volatility. It confirms the area has been successfully broken. Here is one more example of resistance break. You can see prices are reversing in trend. Prices failed in creating new support and created an area of resistance. The belt hold candle broke the area of resistance and prices closed more than 50 to 60% above resistance area. While expecting break, we look for belt hold to close on other side of area. Similarly, while expecting bounce, we want candle to re-enter space before area. For example, here is chart of support bounce. Here you can see prices re-entered space before area with belt hold candle. Again, it managed to close more than 50 to 60% on other side of area. Again, we have two examples of support bounce. The first bounce, which is represented by black arrow, closed more than 50 to 60% above support area. Same we can't say for bounce represented by red arrow. Price did close above support area, but it might be roughly 40 to 50% above area. While break or bounce, we expect close to be more than 50 to 60% with respect to support and resistance area, based on which we can say it was a weak or strong bounce. To trade a weak break or bounce is purely a choice because in some cases they also end up succeeding. Personally, I avoid all weak trading opportunities and I would also recommend you the same, because even strong entry points are prone to failure. In such cases, by taking trades on weak signals, you are only going to reduce your win rate. Again, fear of missing out, aka FOMO, is considered as bad while trading. Trading few strong opportunities is much better than trying to capitalize on every trade opportunity. The next single candle pattern is Doji. A doji is trading session where the opening and closing prices are the same or very close. In a trading range, it represents balance between buyers and sellers. After long advance or decline, doji represents weakness in current trend. A gap up doji with huge volume after long advance should be treated with respect and trade should be terminated. Similarly, a gap down doji with huge volume after good decline should also be treated with respect. Doji can act as both continuation as well as reversal pattern. Finally, a doji needs a belt hold candle as confirmation. Similar to doji, spinning top is pattern that needs confirmation from belt hold candle. Spinning tops are candles with small bodies. Their shadows can be long or short. In spinning tops, size of body matters than size of shadows. Spinning top indicates indecision where bulls and bears no one is sure to take control of trend. Similar to doji, they are not important in trading ranges, but they are important as part of price pattern. Now let's take a look on how they are confirmed. If you find doji or spinning top on support, then look for a candle that has made higher high than doji or spinning top. If bullish belt hold candle closes above opening of this candle, then it would be considered as valid confirmation. Similarly, when you find doji or spinning top on resistance, then look for a candle that has made lower low than doji or spinning top. Take a trade when bearish belt hold closes below opening of that candle. For example, here you can see spinning top formed on support. The red candle before spinning top have higher high than high of spinning top. The bullish belt hold candle closed above open of red candle. This is what we call a confirmed spinning top. Here is one more example. Here you can see doji. The red candle has higher high than doji, and to get confirmation we need belt hold candle to close above its open close range, which also happened. But as you can see, confirmation failed and stop loss would have got hit. There are two problems here. First, signals do not deliver profits all the time. Sometimes they do fail to deliver profits. Next, this confirmation was weak. Situations where confirmation candle forms instantly after doji and spinning top usually have higher chances of success. On same chart we can see another example where confirmation candle formed instantly after spinning top. Here you can see spinning top. The spinning top formed before it had higher high. The belt hold candle that formed after it closed above open close range of red spinning top. As next example, take a look on this chart. Here is spinning top and confirmation candle is 2 candles away from it, which makes this confirmation weak, and still we got profitable price move. Here is final example. Here confirmation was strong and we got profitable price move. Again, important thing to note among all examples is that almost all weak confirmations not only delivered smaller profits, but they also delivered them much slower. Whereas in cases where bullish belt hold candle has to battle bearish belt hold candle, profits were bigger. The battle between two belt holds usually ends up favoring pattern in spite of pattern being weak. For example, here is chart that was shown to you while discussing belt hold support bounce. Here we can see spinning top, and this bearish belt hold had higher high than spinning top. The bullish belt hold confirmed spinning top by closing above bearish belt hold. Again, point to note is that battle between belt hold while confirmation increases strength of pattern. With that said, I would like to close this lesson here. But before we close, I want to make clear that I cannot provide you any experience-based information on trading candlesticks. Before I took trading as my full-time job, I was indicator trader. When I started trading professionally, I decided to quit dependency on indicators and trade charts naked based on basic concepts. Now I trade only those concepts which you have already studied in first 3 sections of course. And next I have special interest in mastering build-up area. I lack good professional experience on trading candlesticks. The example charts that I showed you doesn't mean a thing. You have gone from this lesson and now even you can explain all that stuff on already formed chart. But real skill doesn't mean showing already formed charts. You must be able to trade them, and for that you need experience of those trading situations. I said it before and I'm saying it again. There are no expert traders. There are just experienced and inexperienced traders. I am experienced in trading basic concepts and inexperienced in trading candlesticks. With that said, let's move to the next lesson in which we will take a look on pin bar pattern.